Today we're going to talk about FSLY, a company with such an ugly website. They must be really good if they're doing this well. It's times like this I wish I can invest in SpaceX. Hey everyone, Steve from the 11ish, a channel where we talk about lucrative but sound investment opportunities requested by people like you guys. Today we're going to talk about FSLY, quite an interesting company that I dare say most people don't fully understand, just because it's a little bit more on the technical side, a little bit of technical jargon thrown around. But I bet most of you actually use FSLY because it's an underlying technology that a lot of the front-facing companies that you and I use on a daily basis leverage. So in this video, we're going to talk about the pros, the cons, and how it might fit in your portfolio for the next 3 to 6 months. If this is the type of content you've been looking for, please hit the like button and let's get started. As always, I always start on the product side. It's very important for us to understand what the product does, what the company sells, before we invest in it. FSLY does edge computing. And before you pass out on me, I'm just gonna take one quick minute to explain what it is. So imagine you have a shit ton of IoT devices like your phones, your fridges, your microwaves, your toilets, all of them trying to connect to the internet at the same time. Imagine a DMV, everyone's trying to go to the DMV at the same time, and it'll slow things down, right? Because everything's queued up. Now imagine that you distribute where everyone needs to go so that not everyone's going to the DMV. Someone's going to the grocery store versus the Macy's. Long story short, it optimizes the traffic and the data so that not everyone is jammed up into one single place that they need to go to get the information that the technology needs. And similarly, another reason why this is important is because of a literal distance, a physical distance. So for example, your data might be stored in California for cloud storage, let's say, because you live in California and the company that you store your data in is in California. But if you're traveling to Australia, unless they created optimizations, it literally takes much longer for your data to get to Australia before you can access it. So this is another reason for edge computing. Now, companies like Hotel Tonight, Airbnb, DoorDash, New York Times, I think, there are quite a few companies that leverage FSLY to do this. Shopify is another good example. You know, all of the SMBs that leverage Shopify for their e-commerce business, Shopify uses FSLY. It's also important to note that, as you might imagine, right, back to the Australia case, you're not always in Australia. So if you're accessing your data in California, you don't need data optimization necessarily. So a lot of these companies, they buy what they need. That means not all of their traffic is leveraging FSLY, but the ones that needs optimization, that's when a company like FSLY comes in. All right, guys, I hope that made sense. Please leave a comment and let me know if it did or anything I can do better. Hopefully that helped. So the first pro I want to talk about is the fact that almost 90% of their business is enterprise. This is important because enterprise business is a lot more consistent. It's a lot more predictable because of their sales cycles. And also you can build a pipeline that's easier to maintain than, you know, trying to deal with SMBs and inbound, outbound that way. The fact that they've increased their projection for the year by almost 10% is a good sign. That to me means that their pipeline is built out in a way where they're confident that it'll grow. Especially anything technical, you can go to Reddit and just Reddit, whatever the company name, and you can get very insightful information about companies like this. You can see whether the tech community likes the product, and the tech community does like the product, which is a great sign. So the fact that their projections have increased is a great sign. And also they've announced that their average deal size have increased by 20% as well. That's also a great sign. I think it's about 460,000 per contract. That's a great sign. Enterprise contracts, as I'm familiar with it, is usually about a 2-year period. So you know that the money is gonna be there, right? They're making good money, they're building pipeline, they're basically building something that's sustainable and doing very well. I think these are all great signs for a successful business. The number one challenge that you should be aware of is this is a very saturated space with technology that is not very different from each other. So going back to the whole research idea, if you just Reddit FSLY versus, you start seeing the autocomplete of a bunch of companies that, you know, tech community compares against FSLY. You'll see that FSLY does very well in terms of the customization aspect of things. But I think it's a little bit concerning that, for example, someone was comparing FSLY with Cloudflare, and they're saying that Cloudflare is like a Mac and Fastly is like a Linux. That is in a way saying that if you want super customizable experience, then use Fastly. But if you want something that just works, then perhaps go with a different competitor. Similarly, there's a big concern with the fact that there are other bigger public companies like Akamai and Limelight out there who makes a lot more money, owns a lot more of the market. And again, if there's not that many product differentiation, then it's more about who you know, how big your sales teams are, which makes me very concerned in terms of going forward, how much of the market can they capture, you know? Frankly, I think a better strategy for them is to get acquired. The team's gonna get paid off, the market's gonna grow, economy of scale. I think everyone wins in that scenario. That being said, you know, if they want to run the business this way and they're actually building product differentiators, then I see a potential here, right? There is a chance for potential. My second concern is that their entire revenue stream is essentially built off of 300 enterprise customers. And this type of product is not that hard for them to switch. You know, if the pricing changes in an unfavorable way, they'll jump to a competitor easily. Especially when, as Reddit said it, 80% of everybody offers the same thing. The rest is about, you know, the user experience, the onboarding, the integration, that kind of stuff. Again, if you know something I don't, please let us know. But as it stands, no product differentiators. It's all about pricing. It's all about networking and sales. And they don't have that many customers. I find that very concerning as an investment. So the last question is whether the stock is worth buying. The business is sound and is doing well, right? It has the potential of being acquired because it's a decent sized company and it has good technology and partnerships. But I think at the current price is too much. There are too many competitors. There's not enough product differentiation for it to be this interesting. So if you made money off of it, congratulations. I highly recommend that you sell. If you're looking at the stock, seeing the 3x growth and wondering what you should do, I think that you should sit out and find something else. The amount of risk involved for it to go higher before they capture a lot more business is way too high. So until they have a kick-ass product differentiator, I highly recommend that you collect your profits or sit out completely. All right, guys, I hope this helps you make your decision in terms of what to do with Fastly. If you have any questions or concerns, please leave a comment. If you have any requests, also leave a comment. Hanlin, I did not forget about you. And if you haven't done so already, please hit the subscribe button, and I look forward to working with you next time.